Alright traders, I am back again with another video, and in this video I want to take a look at the Aussie Swiss franc. Okay, so basically let me get this set to the daily time frame so we could go back and look at what we wanted to talk about. So here we are, daily time frame on the Aussie Swiss franc. So going back here, you could see starting back here, this was July 2017. So all these arrows that you see, the blue arrows and the red arrows, the blue arrows here, and then all throughout here, that's me trading this asset throughout this time, because you could see the reason I've been trading it a lot is because it's been in a range and it's been bouncing on these range levels. Now my last trade with this was at this point here, and I traded it all the way down through this range, traded it from the top back to the bottom. Now the thing about it, basically, when we have our member sessions on Sundays, every Sunday. So I haven't been putting out a lot of videos for trade setups, and the reason is because when we do our session on Sunday, we talk about all these pairs. We talk about every pair that's listed here. So if I'm looking at Forex, I talk about all these. I go through all of these, talk about the setups, the trade opportunities and everything. So we'll go through all those. Now the problem is a lot of people, after they leave the session, they don't mark down some of the things we talked about, or they don't remember what trade setups. That's because you're not using your journal, or you're not taking notes, or you're not setting price alerts. Those things, those are the things you need to do. So really trading is really should be your business. So you need to treat trading like it's your business, because you could be trading from now until you retire and some, even through that point, and making profits, or you could trade now and be done in a couple months because you lose your whole account, or you just get tired of trading because you're not profitable and it's not working out for you. And there's other things about that we could talk about, but we're going to stick steady with here. So the reason I don't put those trade setups out a lot is because we talk about these pairs. So when we were talking about this last, I want to go back and look at what we were really talking about. But what I'm going to talk about right now is why we took a trade on Sunday. We had a trade set up for Sunday. So when we go back, you could see this was Sunday, and this candle had been developed, and it closed like this on Friday, and then this is the Sunday open candle, closed on Monday, and then today for Tuesday. But we want to look at the 4-hour time frame, because when we looked at this, we already knew that we figured we would get a bounce here, because really at support and resistance, we're going to trade support, we're going to trade it long, and resistance, we're going to short it. All right, and we're going to do that until the market tells us otherwise, and then we'll change our outlook. Basically, not our outlook, but we'll just change over when resistance comes support. Now we'll buy it. All right, because most of the time these breakout trades don't work, because what happens is a lot of times traders jump on the boat because they get caught in a bull trap, and the next thing you know, the market goes to the downside. So there's two bull traps on this chart. I'm going to show you on both time frames. The first bull trap is this one here, because what happened here, the market went higher and then it showed this candle, but then it opened up a little and started to move higher. Well, really a lot of novice traders or breakout traders, whoever, really jumped on this to think it was going to go long. But what happened here, you had a big outside bar. It went higher and then it went lower. It broke the previous high and it broke the previous low. So it engulfed this previous body, this previous candle, and made that an outside bar. So the market dropped to the downside. When we were at this point, we were looking to short this because we were right at the resistance level, and we got that level from this range here. You could see this perfect range. All right, so we love to trade these ranges because these are very profitable ranges, especially if it's a clean range where you could really define the levels and see the clear, concise movement. So you could see that there, and then you could see it also here. Now the market just came back to test this level, so it was really the first test of the bottom level here, and we took the short here. Now when we talked about the short, we went to the 4-hour time frame, because that's how I enter my trades. So what we had that day, on Sunday, this was the only candle we had. I told traders to watch out, because you're going to get caught in a trap here. All right, if you try to go long here, you should wait. So we put our entry at this point, and luckily we weren't triggered, because we could have got stopped out because our stop loss is up here. But also because we wanted to be at the previous highest high, and let's see, yeah, that's where we were, that level. We moved up. Now the market moved higher, and then here's where it caught more traders on the 4-hour time frame. This is a classic bull trap. Again, you could see the 4-hour candle breaks this level. Everybody's in love with this. Everybody's jumping to go long. Then it goes even higher a little bit, not much, but it went higher. You could see bigger traps than this. This was just a small one. But then it broke the previous high, and then it came back down, broke the previous low, engulfed this candle. You got another outside bar on the 4-hour time frame. An outside candle on the 4-hour and an outside candle on the daily, both signifying that the market trapped these traders in their trade. Okay, so I got disrupted a little bit. But sorry about that, guys. But anyway, yeah, we had this nice signal here, and then the market violated our level, entered the market there, and we made good profit. Now, I always tell traders to look at the market to tell you when to get in and out of the market. Yes, you set your levels, your profit targets, where you think the market's going, and alerts at those levels. And those are based off of support and resistance anyway, or you could use Fibonacci retracements or anything to that nature to figure out where your targets are. We use a lot of Ichimoku stuff to figure out where our targets are. So basically we really use 1-to-1 ratios or measured moves or something to that nature. Now in a range, I'm pretty much going to try to get back down to the bottom level. Here the market's showing a bullish engulfing, and it might cause you to get out of your trade. There's some good things about this trade that I think, and there's probably going to be another opportunity short here. So we'll cover that in our next session. We're going to cover that short opportunity when we get to that point. We're not quite there yet, but we're going to be close to that point. If the market continues a little bit higher, we'll be able to get another short opportunity quite possibly and trade it to the downside. Let me take you back to what we were talking about on Sunday, so you could see exactly what we had on our member session. So we go through all the pairs. So I always tell people, don't worry about missing trades, because I'm covering all of these assets, all of these on Sunday. So when you're talking about trades and trade setups, out of all these assets, maybe we could find 5 good trade setups, and if you keep your eyes open for those, you catch those. Now, the other thing about it, if you don't have to rush to catch a trade, because I can definitely show you where the market breaks a level and pulls back to certain levels that you could catch the same trade if you're patient. All right, everyone feels they're missing a trade. You're never missing a trade. Go to another asset and see if you can catch a trade. Go to another pair, see if you can catch a trade. Don't force a trade that's already past you. But let's look at what we were talking about on Sunday. Ichimoku, here's another one where it's not going to help you, and I'll show you what you could do instead. To me, Ichimoku did help me here. It doesn't help me here. You can see what I'm saying, flat market. I'm better off trading these levels. See? I'm better off trading these levels, not anything with Ichimoku here. This is really flat. This is super flat. Ichimoku's not helping me one drop here. Now, see, the Forex is flat. Forex gets flat for a good while. I'm better trading the range level. I'm better take Ichimoku off and trade it. This is a little not flat. This is super flat. See how Forex goes so flat? I take Ichimoku off and trade these support and resistance levels. I can make more profit. And I probably lose more trades with Ichimoku here. So at this point, I don't believe it's really helping me. I kept it on here because we started to run, and then I saw the big C clamp. Well, at this point, what I'm looking at is now I'm not looking at Ichimoku. Let's remove it. Let's hide it. Don't you agree that it's like you're at the bottom of this level, you dropped here? Don't you think we should be looking for the short here? All right, so I think we could get an entry here. First of all, we got a hangman here. I don't want to trade the length of the hangman. It's too deep. I got an indecision candle at the moment. By the time this closes, it may not be that. It could close down here. I think I go to the 4-hour time frame and look for my short. So for me, yeah, there's 2 opportunities to short this. Now let me see what the divergence is telling me. Okay, immediate divergence, not a lot. This divergence, yes. Immediate divergence, not a lot. Let's go back to the daily. Yeah, some divergence here. So I like that. So let's go back here. Okay, so I got a couple opportunities here. Now, I can put an entry at this level, which gives me a better entry than the daily level, right? Because that daily level is down here. See, we already got a better entry already. All right, so I have a better entry. And then I also could look at this. Now, I would box this in if I'm just going to trade this level. Now, I think your entry is here, and I think your stop loss is up here. I think you short here. If the market goes higher, you're never triggered. If it goes lower, then triggers you and goes higher, you're probably going to see what you're going to probably see is this. The market loves to do this to you, trigger you, then go higher, then go all the way back down, which would then be you get caught in a bull trap because everybody thinks it's going higher. And the market would love to do that. It does it a bunch. All right. Now, I could box this in and trade outside the box, but I feel like the better, so I would trade outside the indecision box, which means I can close here or I could close down here, which would eliminate me getting a better entry here. So at this point, I feel like the 4-hour entry is at this point, this level short with a stop loss up here. That's the way I see it. We're ranging. Ichimoku's not helping you at all on the daily time frame here or anything. I think you're flattened out here. You're bouncing on the bottom of a strong support level that was a range. So let's see what we get here. Questions.